targeting 62,000 for Bitcoin by the end of March. I think there's a good chance we're making our lows for the first half, like this week. Bitcoin is down, but it's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. To me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence, but the investors view this as a crisis when it's really a growth scare. Is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, a prominent financial analyst, predicts Bitcoin could reach $62,000 by the end of March, seeing current dips as retracements rather than bearish signals. He emphasizes Bitcoin's resilience despite market turbulence and its increasing adoption as a store of value, comparing its long-term trajectory to gold. Lee remains optimistic about Bitcoin's future, highlighting the potential for massive growth driven by institutional demand and ETFs, which could bring billions of dollars into the cryptocurrency market. Lee believes the ongoing adoption of Bitcoin by institutions and governments, along with developments like ETFs, is reshaping the financial ecosystem. He anticipates a rapid increase in crypto wallets and broader acceptance of digital currencies. Despite short-term volatility, Lee views Bitcoin as a transformative asset poised for significant gains as liquidity and demand grow. In the broader market, Lee addresses concerns about economic uncertainties, such as tariffs and Federal Reserve policies, which he believes could impact market sentiment. However, he remains confident that Bitcoin and stocks are well-positioned for growth as investors overcome near-term skepticism, underscoring the importance of long-term investment strategies.
You think back over the last year, in Bitcoin in particular, right, we had the approval of the ETFs, we had a big ramp in those things, then we saw it go sideways for, I want to say 7-8 months until the election, and then it goes from basically 65,000 up to 105,000, and now it's back here. It broke below that 90,000 level, and maybe it's like 84,000 or something like that. Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct, and his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now. I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, And the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy.
Do you think we're going to get a 10% pullback in the S&P this year? Because we did have one July highs to the August lows, and things kind of accelerated into that August low, and it felt a little panicky. And again, since then, we haven't had too much panic. I think that move in December after the Fed meeting, that felt really bad. But we were not making, it didn't take long to make new highs.
Well, I think that July to August was essentially, I would say, Fed driven.
Yeah.
And so that makes sense. Because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in. That's why I don't think
But it probably takes longer than expected, because I think we keep throwing these threats out, but we don't actually put any requests for concessions out, right? There really aren't that many right now. I mean, it just seems like it's a bit of a tit for tat. And I think the other side is just kind of sitting there and they're taking the volleys right now because they don't really know what they want.
I'm not an administrator, so I don't know what kind of back channel talk there is. I'm sure there is.
Tom Lee predicts Bitcoin reaching $62,000 by the end of March, viewing current dips as temporary corrections in a long-term upward trend. He highlights Bitcoin's growing adoption as a store of value and its expanding institutional support, reinforcing optimism for its future despite short-term volatility. Lee also emphasizes Bitcoin's transformative role in the financial system, with increasing wallet adoption and ETF-driven demand driving its growth. While acknowledging broader economic challenges, he urges investors to focus on Bitcoin's long-term potential as a key asset in the evolving digital economy.
The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's a fact. Because, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused, well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. And but then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because a shallow recession. A recession is unknown once it starts. I'm going to say I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. And I'm not a Fed watcher, but we do watch what the markets are pricing. The market's only pricing a 27% probability of a cut in May. And by the way, the bond market's also, if you look at distribution, pricing a 23% chance of a Fed hike. So there's still a very large cohort that is quite hawkish in the bond world. I would guess that as this tariff stuff causes confidence to fall down and Doge, et cetera, that 23% chance of a hike goes to zero. But I also think the odds of a May cut should be higher than 27%. The market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner.
Tom Lee remains optimistic about Bitcoin's future, predicting it could reach $62,000 by the end of March, even amidst current market turbulence. He views recent price dips as retracements rather than reasons for concern, emphasizing that Bitcoin's adoption and its role as a store of value continue to grow. Lee highlights the significant institutional interest, with Bitcoin ETFs and increasing wallet adoption pointing to a long-term upward trajectory despite short-term volatility. Lee also underscores Bitcoin's potential to reshape the financial system, citing its ability to detach from traditional economic metrics and its expanding role in global markets. While acknowledging the uncertainties posed by tariffs and market sentiment, he maintains that Bitcoin's transformative power will drive its value and adoption in the coming years. Investors, he suggests, should focus on the broader potential of Bitcoin as a key asset in the evolving digital economy. Do you think Bitcoin will surpass $62,000 by the end of March? How do you see institutional adoption impacting Bitcoin's long-term growth? Feel free to share your thoughts in the comments.